Netflix, monthly users, 40 million. You cover the company and your target price has been $650. What's your target now?
No change, Stu, and happy Friday. I'm just, you caught me off guard with the Scotty Scheffler
Yeah.
golf news. Anyway, let's see. Yeah, Netflix, we had three pieces of news from Netflix this week. First, they're going to be carrying the NFL on Christmas Day. If that isn't the sign of this company really ready for prime time, I don't know what is. Secondly, they disclosed that they have 40 million monthly average users. That's just for their ad-supported service. So they're starting to gain critical mass. You have 50 million users, and you become pretty much a must-buy for advertisers. And Netflix is knocking on that door. And third piece of news from this week is that they're now going to be bringing in Google and a company called The Trade Desk to better sell their ad inventory. So, we've been watching Netflix try to build up its ads business for the better part of 2 years. They're finally hitting critical mass. This is the strongest position I've ever seen Netflix in, either financially in terms of free cash flow or competitively or fundamentally. So it's a stock, I don't have a lot of upside to the price target, so it's a small buy for me. But I'm just really impressed with what they've been able to do over the years. It's not one of my top picks. I like it. You want to be long. You want to stay long Netflix. And if there's a major dislocation, like there was about a month ago on earnings, you want to buy those dislocations. Right now, it's just a small buy.
But Netflix is winning the streaming business hands down. Would you say that?
Yes.
Yep.
Yes.
Okay. Let's move on to Uber. They announced a number of new features and partnerships this week. Has your target price moved? It was $80. Have you moved it?
No, we're still there. We're about $80. And the stock has traded off a little bit recently off these concerns that they were going to be somehow disintermediated or negatively impacted by a fleet of autonomous vehicles. I don't think that's going to happen. In fact, I think that they're probably part of the solution for autonomous vehicles. I think if we're going to have autonomous vehicles, and I think we will, when I think that happens, I think it'll be kind of inserted into these transportation networks like Uber. And so I don't view it as a threat. So when a stock trades off aggressively on that, that's my buying opportunity. That should be our buying opportunity. I continue to like Uber. It's also not one of my top picks, but it's darn close to it. If you get it it's right now, it's around $66. You get it at to me, like the trigger price for me is $60. Below that, it's an aggressive buy. Here, it's a good buy. It's not. So I'm trying to pitch these things, relative to how attractive the opportunity is. And you're talking about relatively a bull market, so it's hard to be super aggressive about any of these tech stocks.
Okay, well, you tell me, what is your absolute number one top stock pick?
It's still Amazon, and I just think that the real thing I'm watching is this AWS business, because there's been a lot of investor angst and concern about whether Amazon was losing the AI race to Azure, and I think that case has been way overstated, and I think there's going to be multiple AI winners, but I'm pretty certain that Amazon is one of them. So as this AWS, there's cloud revenue segment, continues to accelerate its growth, gets close to 20% this year, I think there's a lot of upside movement in the stock, like 25, 30% upside. So Amazon's still the top pick.
I am told that Amazon will put $60 billion into AI in the next year. Is that accurate?
That number may be a little bit inflated, but directionally, that's right. I mean, if you're offering AI tools to the world, you need that kind of capital expenditures. They're going to be in the tens of billions, and it's just a handful of companies that can do that.
Yeah.
Microsoft, Amazon, Google, and that's about it. I mean, there may be two others or something like that can do it. It's a very expensive business, and so I'm sorry. That means the gains are going to accrue to the largest companies, which is what happens a lot in tech. So that's one of the reasons why you stick with Amazon.
Did we break the Scotty Scheffler news for you? Were you surprised?